This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. President Trump says he's willing to lower tariffs on China at some point as trade between the two top economies stall. Trump also ruling out firing Fed Chair Jay Powell before his term ends. Australia's stocks and currency set for gains as voters deliver a landslide win for Anthony Albanese's Labor government, rejecting Trump-style populism amid the trade war. Also ahead, oil tumbling after OPEC Plus agrees to another big output increase. And we look ahead at what's next for Berkshire Hathaway, with 94-year-old Warren Buffett to step down at the end of the year.
Take a look at how U.S. futures are trading early in the Asia session. We are seeing some pressure after 2 weeks of gains already. Of course, this week will all be about the Fed. The expectation right now is for a hawkish pause. Of course, we did get some more positive payrolls number from the month of April, not to mention the Fed's preferred inflation gauge continue to ease. But take a look at how crude prices are doing below that $60 a barrel level. We had OPEC Plus announcing that more than 400,000 barrels a day output increase, and also Saudi Arabia signaling that further increases could come in the future. And we have seen, of course, Brent already at the lowest level in about 4 years, and we continue to see the downside pressure that started with economic growth concerns, with, of course, the trade tensions continuing to rise around the world. Take a look at how we're setting up in the Asian session. We are seeing strength in the offshore yuan at the highest levels against the U.S. dollar since the election of President Trump. We had seen that best day in about a month for the yuan on Friday. We continue to watch that 720 level at the moment. Of course, many markets are closing away on holidays. We'll be watching the Japanese yen. Nikkei stocks on holidays right now, but of course, the Japanese yen also trading within that narrow range as we continue to follow the trade negotiations. Do watch out for Aussie stocks, the Aussie dollar as well, because we could see that relief rally when it comes to the Labour Party of Prime Minister Albanese continuing its policy after the landslide victory. These are your markets away on holiday today, Heidi.
Shery, we continue to follow these developments when it comes to the trade war, and President Trump saying that he is willing to lower tariffs on China while repeating that any trade deal would need to be fair.
Point I'm going to lower them because otherwise you could never do business with them. Yeah. And they want to do business very much. Look, their economy is really doing badly. Their economy is collapsing.
Bloomberg senior editor Wendy Benjaminson joins us now for more. So we've seen a lot more signaling from the Trump administration versus what we've heard from Beijing, right? And even the statement from Beijing on Friday suggesting that their stance hasn't really changed in terms of wanting to see a certain level of, an off-ramp from the Trump administration before they can progress to negotiations. Is this a softening of the tone that we're hearing from President Trump?
Well, I think this was, yes, I think this was in response to the sure, let's talk that we got from China on Friday, which was, from the American point of view, a moment in which, after Trump kept saying, yes, we're talking to the Chinese, and then the Chinese government would say, no, we're not talking to them. They wanted to see, the Chinese had indicated they wanted to see some movement in their direction. And some expression of sincerity, I think, were their exact words. And so perhaps today's comments were an expression of sincerity that would move the ball along to actual talks.
Yeah, President Trump also continuing to focus on Fed Chair Powell. Although he's saying that he's not going to fire him, we continue to see those calls for rate cuts. Take a listen to what he had to say.
You're not going to remove, you don't have plans to remove him before 2026 when his time's up?
That was a total, why would I do that? I get to replace the person in another short period of time.
President Trump's idea of how the economy is faring seems pretty different from macroeconomic fundamentals. What exactly are we expecting him to do when it comes to Chair Powell?
Well, today, we can expect that Powell will serve out his term as chair for another year, and then Trump will appoint someone else. I mean, even though he appointed Powell in his first term, he certainly has shown no affection toward him in his second term, and certainly wishes he would cut rates as the economy here sort of reacts to the tariff regime. However, it wasn't that long ago. It was a few weeks ago in which Trump said his termination can't come fast enough. And then in a follow-up with reporters, he said, if I want him gone, he'll be gone. And today's remarks, which were like, why would I fire Jay Powell, were, sort of odd because, he'd been saying he wanted to fire Jay Powell all along. He did back off about a week later, but today he firmly said, I'm not going to fire him. I'll be able to replace him in a year. And but then he still really very much wants Powell to cut rates.
Goldfields agreed to buy gold broken deal valued at $3 Australian and 40 cents SHR.
Bloomberg senior editor Wendy Benjaminson there with the latest when it comes to the to's and fro's of Trump and trade. And of course, this weighed into the Australian election over the weekend too, with Australian Prime Minister Anthony Albanese returning to Canberra this week with an increased majority, a commanding victory at the weekend election. Bloomberg's Paul Allen joins us now. And it was a landslide. What a weekend it was for the Labor Party. Absolute catastrophe for the Libs. What happened?
Yeah, it was extraordinary, wasn't it? And an early night as well. It was all over. Victory speeches, the works by 10:30 p.m. and voters spoke early. They spoke loudly. The Labor Party, of course, says it won the policy debate. But if we look at that policy, it was a fairly small R reform agenda. There were $5 a week tax cuts, promise to do something about housing, plans to fund Medicare. But as you say, really a staggering rejection of the opposition Liberal Party as much as anything else. So if we take a look at what they were offering, the opposition leader Peter Dutton was pledging Doge-style cuts to the civil service. He later backflipped on work from home. In the early stages of the campaign, he was talking about President Trump as being a shrewd, big thinker. But of course, then came the April 2 tariffs, and the government was suddenly starting to look very safe, reliable, predictable, and that in a large part fueled the victory. Also interesting that in his victory speech, the Prime Minister Anthony Albanese did not mention Trump or the US, but he did say, we don't need to beg, borrow or copy policy from anywhere. During the debate, he said kindness was not a weakness. So in many respects, it was like, say you're not Trump without saying you're not Trump. So what we ended up with was a carbon copy of what we saw in Canada, right down to the opposition leader losing his seat and being out of Parliament completely.
Right, Bloomberg's Paul Allen there as we await the market opens in Australia. There's more analysis on the election results coming up as well. The Trobe University AMP and TechnologyOne CEO Ed Chung, plus Bar Group Asia joining us to discuss the vote in Singapore with the ruling party retaining power. Warren Buffett is stepping down as CEO of Berkshire Hathaway by year-end, with tech and bank leaders rushing to praise the legendary investor for his inspiring lessons on life and business. For more, let's bring in Amanda Cantrell, who leads the U.S. investing team. Amanda, not necessarily surprising, but quite a legacy that he leaves behind.
Absolutely. And that is one of the biggest questions that Greg Abel will face is how can you replicate the Buffett magic, and can he actually continue to maintain its idiosyncratic but obviously wildly successful culture?
And it's almost sort of, in the best sense, a sort of cult-like level of fervour and support from his fans, right, in terms of the investor comments, in terms of just the level of popularity he has. Is that going to be sustained, and does that matter when it comes to the ongoing success of the Berkshire portfolio?
Yes, that is one of the biggest questions. It's hard to imagine that he'll be able to have that same cult of personality as Warren Buffett. But like Buffett, he is seen as an extremely talented executive. One area where he differs in a pretty major way from Buffett is that he's known more as an operator of businesses than a stock picker. Stock picking was truly Buffett's gift. So that's one question shareholders will have is, what happens with the stock portfolio? How does he manage it? Can he manage it as well as Buffett did? And when it comes to the stable of businesses, will he maintain kind of a similar mix of industries, or will he look to diversify?
What's the state of Berkshire Hathaway right now that Greg Abel inherits, and what sort of investment policy or philosophy do we know him to have?
Right. So he is, in many ways, trained in the same Buffett value mold. One thing that he is going to inherit is a massive cash pile. Berkshire, at the end of the first quarter, was sitting on nearly $348 billion of cash. It is it's a major holder of treasury bills, and they've been really struggling to put that cash pile to work for a long time. Buffett has said that he will be patient, or he likes to be patient. When it comes to putting money to work, he's not going to do a deal just for the sake of doing a deal. He likes value, he likes quality. But, the bigger the cash pile gets, the harder it gets to deploy. Now, at the annual general meeting yesterday, Abel said that he thinks of the cash pile as a great defensive asset, which is not typically something that you would hear Buffett say. So shareholders are going to be interested definitely to see how he manages that.
Bloomberg's Amanda Cantrell there with really the end of an era, the start of a new era for Berkshire Hathaway and Warren Buffett. We do have some breaking news when it comes to some M&A action when it comes to the gold sector. Goldfields of St. Johannesburg agreeing to buy Gold Road here in Australia in a deal valued at $3.40 Aussie per share. It says that it is in talks to acquire Gold Road Resources. We saw the Australian company's shares suspended from trading here in Sydney. There has been quite a bit of speculation over this deal. They'd previously rejected a non-binding acquisition proposal from Goldfields. That was back in March. That would value the company at $3.3 billion. But we've seen a price climb, I should say, of more than 20% with this record-breaking rally in gold, Shery, creating a bit of a revival when it comes to M&A action.
Yeah, prices topping $3,500 an ounce last month for gold. Coming up on the Asia trade, hear why JPMorgan Asset Management is still cautious on risk even after the recent stock market rally. Plus, we talk U.S.-China trade with Elizabeth Economy, a former senior advisor to the U.S. Commerce Secretary. Much more ahead. This is Bloomberg.
Today, the Australian people have voted for Australian values. For fairness, aspiration and opportunity for all. For the strength to show courage in adversity and kindness to those in need.
Australian Prime Minister Anthony Albanese speaking on Saturday night after the landslide election win for his Labor government. And Albanese now becomes the first Prime Minister to be re-elected in Australia since 2004. It's what's really been seen as a rejection of the Trump-style populism adopted by the Conservative opposition. For more, let's bring in Andrea Carson, Professor of Political Communication at Trobe University in Melbourne, and also joining us here in the Sydney studio is the AMP Deputy Chief Economist, Mousina. Really great to have you both along with us. And Andrea, I'll start off with you in terms of kind of trying to make sense of exactly what happened over the weekend, because it was interesting. Albanese didn't exactly style himself as the anti-Trump, the way that we've seen from the likes of Mark Carney, for example, in Canada. But clearly the sort of global uncertainty, the trade war, some of the sort of culture war politics were at play here.
Yeah, that's right. It was a very stable type of campaign. As alluded to in that speech that we just saw, Albanese favoured hope over fear. And it was in times of global turmoil that you've pointed to with the trade war, not to mention the war in Ukraine and the Gaza Strip. This was a time, I think, for Australians to seek stability, and that's what they've got with Anthony Albanese.
So, Diana, what does this win mean for the broader markets, given that it wasn't necessarily a surprise, but just how much of a landslide the outcome was? How will investors be taking this today?
I don't really think that there's too much of an implication for markets here, especially not in the long term. I mean, in the in the short to medium term, I guess that the fact that the Labor Party has a majority in both houses, or in the Senate if you include the Greens as well, then it will make it easier for them to pass some of their policies. But some of those policies may not necessarily be seen as business friendly. For example, the higher tax on larger superannuation balances, and the coalition party is generally seen to be a bit more friendly to businesses. So if we did see a coalition win, maybe markets could have rallied a bit more under that situation. But to be honest, there's not really too much here in terms of the implications for markets. The more important thing will be what the Reserve Bank does at its next meeting, which is coming up soon.
And to that point, I guess, with such a strong mandate, perhaps Labor has less pressure for, bigger fiscal spending. Obviously, the campaign was run on cost of living, inflation and the property crisis, right? Does that take the pressure off the RBA to be able to do what it needs to do?
Well, to be fair, I guess both sides of politics were running with quite large spending campaigns. I was quite surprised that even the coalition was going out there so strongly with all these plans for large spending measures. So for the Reserve Bank, I really think that they obviously have been watching the inflation data quite closely. We just got the March quarter figures. That is really what's key to them when they're going to meet and think about their next policy move. They take into account what the government does in terms of the implications for interest rates once we see a change in any spending measures. So if the Labor Party was to change its current spending measures, or if it was to announce new policies, that's what the Reserve Bank would move on. But we know what was announced in the budget. That's what the outlook for fiscal spending is going to be in the next 6 to 12 months. We know that the government sector is still going to be at a very large share of the economy. It's currently at a record high. It's probably going to stay there, maybe move down a little bit. So that's what the RBA is really going to move on. I don't think that the landslide majority win for the Labor Party will really change anything for the Reserve Bank.
Andrea, we know that the soaring cost of living was a key issue in this election campaign. How challenging is the economic landscape for Prime Minister Albanese and his Labour Party right now?
Well, it will be challenging, but there'll also be a great expectation that now that they've got a clearer pathway through the Senate, it looks like they'll have minority control along with the Greens and not have to negotiate with independents as they did in the last election. And of course, I've got this whopping majority in the House of Representatives, one that was quite unexpected. So there'll be an expectation that they will roll their sleeves up and get on with delivering policy, something that they've been criticised for not doing in the first term of having a fairly lacklustre government. So that will involve an expenditure and there will be implications for that, but people will want to see real policy outcomes, particularly on the housing crisis.
Andrea, what next for the Liberals? Because obviously it's a period of soul-searching, there'll be a leadership race, but, this is an election where the demographics were against them. Certainly that's not going to change. There's not a whole lot of moderate sentiment within this party now, and the front bench has been roiled so badly, and Dutton losing his seat and all the rest of it. So what's the path to be able to find that appeal in the next 3 years?
Yes, you've summed it up nicely there. There'll be a long post-mortem. There'll be a lot of bloodletting. This is a party that has moved away from its sensible centre just to the right and is now largely a party outside the major capital cities. It's a regional and rural party. The Nationals did very well. They actually increased their overall share. And for the Liberals, it's catastrophic. So there'll be negotiations going on within that coalition partnership about what that looks like, and also negotiations about what it means for the core of the Liberal Party. It's moved away, a long way from its ideological centre from when it was held by Malcolm Fraser. Will it return back to a more moderate position? These are the questions that I'll be watching, among many others.
Andrea, as we speak right now, we're hearing on the Bloomberg that President Trump plans a 100% tariff on all movies produced overseas. Of course, we continue to follow the latest headlines from the Trump administration on more potential tariffs to come up. And right now, we're now getting the latest headline that President Trump is planning a 100% tariff on all movies produced overseas, 100% tariff of movies that are imported into the United States. Andrea, as we continue to watch the latest uncertainty coming from the Trump administration, how interesting is the latest outcome in the Australian election as also reflecting what we've seen around the world, where instead of punishing the incumbents, which has been sort of the latest trend, we're seeing this more leaning towards safety, towards knowing what's coming up from the local government for more stability.
Yeah, that's right. I think that latest tariff move shows the unpredictability of Trump. You never know what policy he's coming out with next. And there has been a move away from punishing the incumbents. Keir Starmer, perhaps the exception, but there is a return to centre politics. We've seen that with Canada, with the UK, and now Australia, and there's strong relationships between those three countries. And increasingly, although Australia is just a middle power, there'll be an expectation that it will form coalitions with those other governments to rebuff some of the more extremes of the US administration.
Deanna, we were talking a little bit about the property crisis. What do you think now potentially emboldens this new government in the next 3 years to be able to perhaps take, more significant measures to try and fix that problem?
Well, I think that they will be bolstered by the fact that their base and that a lot of mortgage holders and renters voted for the Labor Party. So that could definitely embolden them to go forth with trying to actually achieve more of those plans around increasing supply, which is really sort of key from here if we're to see more sustainable growth in home prices in the next 5 to 10 years, to get more supply onto the market. And basically to do that, we need to move from building 180,000 homes a year, which we're doing right now, to something closer to around 240,000 homes a year. That means working closely with the state and local governments to ultimately get that supply up. And hopefully, Labor Party's large win is going to see some of that occurring.
The other question is sort of how this government continues to deal with Beijing, right? What secondary effects are you seeing for the Australian economy, or is it kind of holding up okay at the moment?
Well, so far we haven't really seen too many impacts. I think it's too soon because we've also seen Trump and his team pause the reciprocal tariffs so far. I know that the tariffs on China have gone ahead to 145%, and that's actually the average tariff rate on some items. It's actually even more than that, which is just crazy. So basically the US and China can't trade with one another. So far we haven't seen any implications for Australia, but what's likely to happen, I think, is that we're actually likely to see lower consumer goods prices here in Australia from a flooding of goods from overseas markets, and particularly from China, but we just haven't seen that yet. I think it's too soon. We need to wait for the reciprocal tariff date deadline, which is the beginning of July, so we have to see how Trump and his team negotiate with other countries around some of these rates. But at the same time, we haven't seen the full extent of where tariffs are going to go. We know that Trump wants to put higher tariffs in place on pharmaceutical products. That's one of Australia's largest exports to the US, so there's more bad news to come from here.
Uncertainty is the only certainty as we go forward, right? Deanna, always great to have you with us. That was also Andrea Carson, Professor of Political Communication at Trobe University. Deanna Mousina, who's a Deputy Chief Economist at AMP, with us. More ahead on the Asia trade. This is Bloomberg.
Thin trading across Asia with most major markets closed. The Japanese yen seeing a little bit of strength while we're watching the Aussie dollar, of course, after that Labour Party landslide victory. The US dollar under a little bit of pressure after its first weekly gain in a month. This is Bloomberg.
This is a good report all around in terms of demand for labor, supply for labor, and muted earnings growth.
This is a good report, and that's important. You've got more resilience when you're coming to a shock from a place of strength.
The challenge is looking forward. There's a pretty big cliff from an economic perspective heading into the next couple of months. And if we don't get a significant downward shift in the tariff rate from China, then things like the strength in transportation and warehousing is gonna very much shut off.
We have momentum going into a difficult period, and the question just is, will this momentum be strong enough to get us through it?
Some views from our guests after the U.S. economy added 177,000 jobs in April. Now, Trump economic advisor Stephen Miran is not ruling out volatility in future U.S. data amid ongoing trade tensions, but he tells Bloomberg metrics that came out after President Trump's tariff announcement still remain sound.
There's been an ongoing disconnect between the hard data and the soft data, and the hard data continue to perform very well. 177,000 jobs last month, a beat of 40,000 jobs. That's the president's second jobs day beat in a row. And on top of that, you've got 11,000 construction jobs, expanding construction sector in spite of the president's crackdown on the border, disproving critics again. And the hard data continue to be okay. And I think it's worth emphasizing that these data represent the period after the president's historic actions with tariffs on April 2nd.
So, Stephen, we need to get into that because there are some people that we've spoken to that worry about the next report. They think that this could show up in the May report. And I've heard the words downside risk repeatedly. Are you confident that some of that's avoidable?
So, look, given the historic scope and speed with which the president acted to put American workers and firms first for the first time in decades, it shouldn't be surprising if there's some accompanying volatility, and that extends to financial markets that we've seen, and it could extend to economic data also as companies sort of substitute activity from one month to another. That remains to be seen. But so far in the hard data, we're not seeing any real evidence of that to be the case. And as you pointed out, there are various soft data sentiment indices that look not as good, but those tend to be influenced by financial markets, and there's been enormous volatility there lately, as you guys are aware, and they tend to be influenced a lot by politics. But historically, the correlation between those and activity has been weaker in the last few years than it would have been, say, 10 years ago.
We are seeing it show up in some hard data, and that's trade volumes. We just caught up with the Port of LA director, Gene Soroka. Stephen, I wonder if you've been in touch with them and how you see this playing out. They're telling us now that trade volumes are about to fall, that what they're about to see through their port could drop by something like a third, 30%, and then from there this could ripple through the US economy. What's the sequencing of things from your standpoint?
Thanks. So as I mentioned a moment ago, there can be some volatility in the economic data, and I think it's worth emphasizing that there are some firms that want to see the outcome of trade negotiations, which will be coming soon, and they want to see the tax bill passed, which again will be coming soon. And as a result, they may substitute activity from one month to another, from one quarter to another, but it all gets averaged out over time. These are not the types of activities for which activity would get canceled permanently. And as you mentioned at the start, the GDP report contained a 5-point drag from import activity. So we're just coming off of a quarter with an enormous amount of imports that by the way, there was a data anomaly in the GDP data that I'm sure most of your audience is aware of by now. But after such a huge import drag on the economy in the first quarter, it wouldn't be surprising if there were a little bit less imports subsequently. But this stuff all averages out over time.
U.S. Council of Economic Advisors Chairman there, Stephen Miran, there speaking with Bloomberg's Jonathan Ferrer. Some of the other stories that we're following this hour, President Trump says he would further extend the deadline for TikTok to be sold to a U.S. owner if needed. Speaking to NBC, Trump said he has a little warm spot for the popular app and would like to keep it available for Americans. The president has twice extended the deadline for ByteDance to divest its U.S. operations. Japanese Finance Minister Katsunobu Kato says he won't use the sale of his country's U.S. Treasury holdings in trade negotiations with Washington. That's an apparent turnaround from his comments last Friday when he'd said that using the holdings as leverage did exist as a card. Japan completed a second round of trade talks last week and expects the next set of high-level talks could come in mid-May. South Korea's ruling People Power Party has selected former Labour Minister Kim Moon-soo as its presidential candidate. Kim will be up against opposition nominee Lee Jae-myung, who is leading opinion polls ahead of next month's election, I should say. But the Supreme Court last week found Lee guilty of violating election law, casting a shadow over his campaign.
Singapore's Prime Minister Lawrence Wong has secured a strong mandate in his first electoral test, with voters choosing stability amid the turmoil of the Trump trade war. Bloomberg's Avril Hong is in Singapore for us. Avril, so tell us about the extent to which global uncertainties influence voters.
Yeah, Shery, we've seen how this is really the first electoral test for the Prime Minister, Lawrence Wong, and I think it's safe to say that he passed it with flying colors, because if you just look at the landslide victory, how the ruling PAP managed to clinch a supermajority in terms of the vote share versus the results in 2020, it's at 66% this time around versus roughly 61% in the previous election. And not just that, when it comes to the number of seats in parliament, the opposition held its 10 seats, meaning they didn't make further inroads. So all this suggests that, as with Canada and Australia elections in the past week, this time around in Singapore, voters really choosing the incumbents. And I think one economist put it best, that given the shifting geopolitical alliances, voters were never going to take a gamble and use this election as a form of a protest vote. So that sort of neutralized these inflation concerns. This election can also be seen as a sort of endorsement of the Prime Minister's strategy so far to mitigate cost of living concerns, as well as to enhance, deepen social aid. Singapore last year, for the first time, had these jobless benefits being rolled out. So all in, it is a renewal of public confidence in the ruling People's Action Party that has, of course, governed for more than 60 years in Singapore.
Yeah, the PAP, nothing else really has a reputation for governing with stability, predictability, but these are really unpredictable times, right? In addition to the fact that we're seeing a lot of new faces within the party as well. What is the mandate now that they're running with for the next term?
Yeah, so this is seen as a strong mandate, but to your point, this is coming at a sensitive time of a leadership renewal within the ruling People's Action Party. So the results suggest that this leadership transition can take place without much fuss from the opposition. Note here that a number of long-serving cabinet ministers have recently announced their retirement. So it's really a period of leadership renewal within the party. So the next thing we're going to be watching out for is the formation of the cabinet. That's expected within the next 2 weeks. But trade is also something that we're going to be keeping a close watch on, because it's worth noting in one of the key battleground states, Gan Kim Yong, the Deputy Prime Minister, who is known in Singapore as the task force man, because he leads the task force which is responsible for Singapore's response to Trump's tariffs. He, in that district, managed to fend off a strong challenge for the opposition. So the results also suggest that when it comes to Singapore's response to tariffs, any forms of negotiation, that they're going into this with greater confidence.
Bloomberg's Avril Hong there. And some of the other stories that we're following this hour, Israel is promising a harsh response to a missile strike by Houthi militants that penetrated its aerial defenses and struck near the country's main airport. Israel's military says the missile evaded several interception attempts due to a technical issue. Prime Minister Benjamin Netanyahu signaled his country holds Iran responsible and will respond accordingly. Chinese President Xi Jinping is set to visit Russia from May 7th. According to state media, he will attend the Victory Day parade in Moscow and discuss international and regional issues with President Putin. The Kremlin says the two parties will also sign a number of bilateral documents.
Shery, taking a look at oil, and prices have tumbled as the trading week begins. OPEC Plus agreeing to increase output further in June. Bloomberg's energy and commodities editor Andrea joins us now for more. And this was a big concern when it comes to supply side for these markets, and it's sort of eventuated. So is it an unusual time for that decision to be made to return more supply to the market, given all of the demand side uncertainties?
Yeah, well, it was a bit of a surprise. So they announced they would restore 400,000 barrels a day from June. That was the same as a similar recent increase. Crucially, they also indicated, the Saudis are they, by the way, that more were likely to come, which is obviously spells very, continued declines for oil prices. Interestingly, Saudi Prince Abdul Aziz bin Salman actually invoked the 1973 oil embargo when he made the decision, which was a bit of an odd comparison to make when, because that was when OPEC stopped production and sent oil prices skyrocketing. But he did say that the parallel was OPEC had withstood tough times in the past. I guess 2 or 3 reasons, probable reasons for the decision. One, the Saudis may want to be punishing OPEC member countries who haven't been complying with quotas, particularly Iraq and Kazakhstan. It may also ingratiate them with President Trump, who wants low oil prices, and he's due in the Middle East soon. And I guess the other reason is that they may be seeking to win back a bit of market share that they've lost over the past few years to producers in the Americas, mainly the US, Brazil, and Guyana.
So, Andrew, what does this mean for prices going forward, given the demand uncertainty as well?
Yeah, well, I mean, it means prices are likely. Prices have already dropped by quite a lot in the last few months, are going to go down even more. To what level, I couldn't really say. But, I mean, on the demand side, people are obviously very nervous about, you know, trade wars and how that is going to sap consumption. Obviously, a lot of that is in flux because we don't know if some of these tariffs are going to be rolled back. Yes, I mean, demand outlook looking not good and very uncertain. Now we're getting at this big rush of supply. I guess there's also almost a parallel to the early days of the virus when we had a Saudi-Russian price war at the same time that demand was collapsing. But yeah, certainly you would expect oil prices to probably keep falling further from here.
Andrew, what does this mean? How does this reflect what's going in within OPEC Plus and perhaps some indications of group cohesion that we're seeing right now?
Yeah, so I think the Saudis have been very frustrated with some members who haven't been complying with quotas, and a couple in particular that I already mentioned were Iraq and Kazakhstan. So you can view this perhaps as the Saudis almost seeking to punish members who haven't been complying with quotas. It will make relations within OPEC even more tense. I mean, the Saudis have the ability, I think, to withstand low prices for a while, but a lot of the other countries probably don't. So, I mean, it's already a pretty tense relationship. This will make things even worse.
Andrew James, good to have you with us with the latest on oil. We have more ahead. This is Bloomberg. We're hearing from President Trump at the moment saying that China and U.S. officials are talking about, quote, different things, but he has no plans to talk to President Xi Jinping this week. When it comes to broader trade deals, he says that it could come this week. It could very well be that the trade deals will be coming forward this week. On China specifically, he says that he wants a fair deal with Beijing, but that China is ripping America off. So we had heard from President Trump already make some comments about the willingness to lower tariffs on China because they're so high, that the two countries have essentially stopped doing business with each other on an interview with NBC News. Right now, we're hearing more details coming from the president, saying that he has no plans to talk to President Xi Jinping himself this week, but that China and U.S. officials are talking to each other about different things, that he wants a fair deal with China, but he insists that China is ripping America off. We'll continue to monitor the latest lines. Of course, President Trump has also just announced a directive for 100% tariffs on movies coming into the United States. Heidi.
And of course, the trade war, Trump-style politics loomed large when it comes to the election here in Australia over the weekend. It was a historic landslide victory for Anthony Albanese's incumbent Labor government. Let's bring some perspective from corporate Australia now. TechnologyOne is one enterprise software company, and joining us now from Brisbane is its CEO and Managing Director, Ed Chung. Ed, really great to have you with us. So give us your reaction so far in terms of this stronger mandate and what it could potentially mean when it comes to the business sector.
Yeah, I think the results speak for themselves, Heidi. But there's so much things that come in modern Australian election campaigns. But the thing that really hit home for me was when the US came out, on April 2nd and announced, global tariffs. Our PM, Anthony Albanese, was out in front of the cameras responding with a 5-point plan within 30 minutes, and the opposition gave its full in principle support. There were defensive measures, anti-dumping laws, money and loans for business to work with government to find and develop new markets. But the big one was that Australian businesses will be at the forefront of the queue for government business. And that's really important. And Australia needs to move fast. And if you think about Canada, when the new PM won his election there in his election speech, he drove home the message that the old relationship with the US was over, and that Canadians need to unify and plan and build a more independent future. And like Canada, we must now have that serious discussion about how we use all the tools at our disposal to rebuild Australian industry and capability. And that has to be way more than manufacturing. We need to take a serious look at sovereign capability and services like information technology. And our PM statement in the beginning of that campaign, it was a really powerful start. Right. But now we need this new federal government to lead all tiers of government in what we call Team Australia. Now, with the election behind us, it's time to start, the new team by bringing the states and local government together with the feds.
So what do you expect Prime Minister Albanese to do now that he has such a strong mandate, and what more would you like to see?
Well, I think he will really push hard for Team Australia, and when I take industry's lens, that's a really wonderful thing. He's also undertaken a review of R&D in Australia, and it's evident to us. We've done an independent research paper that shows that everyone has been asleep at the wheel: business, policymakers, researchers. We've all become very complacent during the mining boom in Australia. But another thing happened in the 90s, and that was that our Australian government was persuaded to buy information technology rather than build it. So if you think back then, basically Australian government ran up the white flag and said, we're not going to invest in tech. But now that Albo's back in and his focus on R&D, you can see that the foundations and the plans to build and grow national tech industries will really get a big push. I really believe that. Now, our paper shows that countries that invested in ICT of their own are leaders in R&D and leaders in productivity. And I think that Albo's got this real push on local industries and productivity, and I think you'll see that through all policies coming out now.
We heard from the Treasurer talking about how this first term was really focused on inflation. Second term is now time to also look at the challenge of productivity. I do wonder, you say that other nations are not going to do any favours for Australia, but could we benefit from the likes of, say, the brain drain that we're seeing from the US, and how do we make Australia a more appealing home from some of that global talent that might be exiting?
I love that comment because, there is a lot of exiting talent. We see it in the recruitments that we do just in our own business, but that would obviously flow through to the whole tech industry. So Australia is a wonderful place to, live, play and work. There's a lot of investment, a lot of focus going into, at least in our space, into technology, and I think that will drag that talent away from, say, the US into Australia.
What is the core reason that we don't see more? I mean, obviously Australia has its own unicorns, it has tech success stories, but why aren't we seeing more of it compared to some other ecosystems?
Yeah, I recently had a roundtable with Malcolm Turnbull and a few other, notable ex-politicians and policymakers, and they said something like, in the US, people are driven to innovate, encouraged to innovate. And in Australia, we have this sort of culture of putting our hand out. Now, we've got to, as business now, change that culture. If you look at TechOne, it was founded in Australia 37 years ago and is a very successful company. And we want more of those. It's not about my business, TechnologyOne, it's about how do we encourage more investment, more risk-taking, more entrepreneurship, to build those unicorns in Australia. We've got a lot of work to do there.
Ed, really great to have you with us. Ed Chung, CEO and Managing Director at TechnologyOne. We'll have more ahead on the Asia trade. This is Bloomberg.
Here's the latest from the corporate front. Bloomberg has learned that Shell is working with advisors to evaluate a potential acquisition of its rival, BP. Sources say any final decision will likely depend on whether BP stock continues to slide after already losing nearly a third of its value in the last 12 months. Deliberations are still in the early stages, and Shell may opt to focus on share buybacks and bolt-on acquisitions rather than a mega merger. Shein is said to be slowing its London IPO plans to a crawl as it assesses the impact of U.S. tariffs on its business and awaits regulatory approvals. Sources say the retailer has halted work on its offering, but could still proceed at some point. While Shein targeted a valuation up to $90 billion in 2023, that number has since fallen to about $30 billion.
Checking some of the stocks to watch when trade opens in Australia shortly. Of course, it is really a holiday thin session, I should say, with a number of major markets across the rest of Asia being closed. But here in Sydney, tracking Westpac, it reported net income for the first half year that matched analyst estimates. We're also watching, of course, the gold space. Gold Road Resources on watch after reports that Gold Fields is set to buy the company in a deal valuing it at $2.4 billion. We saw that stock was suspended from trading with a lot of speculation that this renewed offer was coming. Shery.
And take a look at oil prices right now, because we are seeing it trade below that $60 a barrel level. This, of course, after we heard from OPEC Plus that they discussed making another major production increase, really boosting output by over 400,000 barrels a day. The market opens in Sydney is next. This is Bloomberg.
This is the Asia trend, counting down to Asia's major market opens. And Shery, what a weekend of election results we had, particularly here in Australia. We were expecting that Labor victory, but it was expected to be so much more narrow than what was ultimately a fast landslide reaction that we saw across voters. Really, this sort of leaning back into the incumbent and the rejection of Trump-style politics in so many parts of the world.
Yeah, voters really across the world wanting more stability these days. We, of course, continue to get the latest headlines from President Trump saying now that they have 100% tariffs on movies coming into the United States. He's also talking about conversations with China that trade deals could actually come this week.
A lot of those movies are being shot in Australia, the likes of Australia, New Zealand and parts of Europe as well. So it'll be very interesting to see how these taxes and tariffs potentially come into play. But take a look at Aussie stocks that are coming online. This, of course, as we have a number of closed markets around the region, Shery, including China, Hong Kong, as well as Japan and Korea today. So very holiday quiet in session. We're seeing an unchanged picture, but we could see Australian assets rallying after that decisive election result. Both the currency and shares could see that relief rally throughout the course of the day. Expectations really not just of policy continuity, but perhaps a more emboldened policy mandate under a second term for Prime Minister Anthony Albanese. Energy stocks are one to watch. We could see a benefit from support for the sector. The Aussie dollar could also get that boost, given that potentially we're seeing the dawning of some better trade relations, at least being talked about between China and the US, or talks about being talked about there. The Aussie dollar at 64 US cents there, certainly the sort of premium over the kiwi is quite apparent at the moment as well. We're watching energy stocks in this session, given that Brent has seen that fall of almost 4% at this point, really sinking as that decision for OPEC Plus to return supply to the market is threatening to potentially swamp that supply side at a time, Shery, when we're seeing this trade war create so much uncertainty on demand from major markets like China.
Yeah, President Trump now saying, though, he's willing to lower levies on China while repeating that any trade deal would need to be fair.
At some point, I'm going to lower them because otherwise you could never do business with them. And they want to do business very much. Look, their economy is really doing badly. Their economy is collapsing.
President Trump also speaking on Air Force One just minutes ago, talking about how China and U.S. officials are discussing different things. Bloomberg China correspondent Min Lo joins us now with the latest from Hong Kong. Min, are we seeing some more willingness from both sides to engage some way in conversations going forward?
Yeah, it does sound like this is an early sign that the reaching out from U.S. to China has not been very smooth, because China has said last week that it is considering the possibility of talks. But we have Trump just minutes ago saying that he has no plans to speak with President Xi this week, and also that Chinese and U.S. officials are talking about different things. And that is despite him signaling that he's willing to lower tariffs on China. Of course, U.S. has repeatedly signaled that they are not going to lower that unilaterally as well. And China says it wants the U.S. to remove all unilateral tariffs. And this comes as the Wall Street Journal reported that China's securities czar Wang Xiaohong has been trying to find out what the U.S. actually wants when it comes to cooperation on fentanyl. And Wall Street Journal reporting that China is considering sending senior officials, including Wang Xiaohong, the securities czar, to meet with senior U.S. officials or to meet with U.S. officials in a third country, which is an interesting development if this was true, because who China sends to oversee the development will be quite significant. Typically, at least in the first trade war, it was overseen by China's Vice Premier He Lifeng, or even someone who is the Vice Minister of Commerce. That would signal something, an appropriate person to oversee. But if they send Wang Xiaohong, who is one of the ministers for national security, then it shows that perhaps China wants to limit the scope of discussion to perhaps just fentanyl or national security, rather than opening up a space for comprehensive trade discussions.
President Trump also seems to be feeling a little bit more relaxed when it comes to TikTok, right? Another extension could be on the cards?
Yes, so he said he's willing to give another extension. He has already given 2 extensions, and the current extension, the deadline will end sometime around mid-June. If he were to give another extension, that could give TikTok up to sometime around September to divest. And I guess this gives you another sign of a potential timeline, assuming that TikTok is going to be subsumed under broader trade discussions. It shows that perhaps Trump is not confident that by June he would be able to get some sort of de-escalatory short-term agreement with China. And that suggests that this is going to take a few more months. And of course, a broader and comprehensive trade deal typically takes years to ink out. So we'll have to see. It looks like the process is moving along, but perhaps some sort of hurdles in the way here.
Bloomberg China correspondent Min Lo there, as of course we have heard from President Trump as well, discussing the tenure of Fed Chair Powell. Take a listen to what he had to say about the possibility of getting him fired.
You're not going to remove, you don't have plans to remove him before 2026 when his time's up?
That was a total, why would I do that? I get to replace the person in another short period of time.
Let's bring in our next guest, who's still cautious on risk, even after the recent rally. Of course, we have the latest Trobe headlines, but of course, what we're watching around Fed Chair Powell and where the policy path goes from here. With us now is Kerry Craig, global market strategist at JPMorgan Asset Management. Kerry, great to have you with us. There's been a lot of question marks about the job that Fed Chair Powell is doing, given the focus of President Trump right now. This week, what are we expecting when it comes to the Fed's rate decision, and what do you think the policy path will look like as we continue to hear all this criticism and pressure coming from President Trump?
Good morning, Heidi. Well, I think the Federal Reserve and Chair Powell has fairly thick skin when it comes to the criticism. It's nothing they're not used to. Regarding the policy path, again, I think this week's meeting will be not necessarily a non-event, but certainly no meeting change that would see rates be adjusted at this meeting. There's no statement of economic projections, which will give us new forecasts. So I think the messaging will be relatively consistent with what we've heard before, focusing on the incoming economic data to really assess the weakness, given what we've seen in the survey data. And again, a focus on thinking about the performance of the labour market as well, given the Fed's dual mandate around full employment, as well as assessing the implications for inflation. So I think the Fed will be limited in terms of forward guidance, reassessing and re-establishing that view that they have room to move should they need to. But again, our view is that there'll be basis towards supporting growth and looking through that inflation. That does appear a little bit more, and so we still see them cutting rates, potentially 3 or 4 times this year. The timing of that is a little bit up for grabs, but we do think they could start in June.
Yeah, that's our next step if we couldn't get the proper transcript right now.
How do you assess the state of the U.S. economy right now, given, of course, the data that we got last week, whether it's the Fed's preferred inflation gauge or also the jobs numbers, and what are the implications for U.S. assets? And we've seen significant pressure given the potential of growth being hit because of all of these trade tensions.
I mean, yeah, obviously the weak first quarter numbers for growth, bringing forward a lot of that imports from the tariffs, trying to front run that. They may get some pullback on that in the second quarter numbers that come back, a bit more of a lift in growth. But certainly that's when we'll start to see some of the economic damage being done from these higher prices coming through, as well as the downshift in both consumption and the corporate outlook. So I think the second quarter numbers won't see a massive bounce in terms of the rise in GDP when we do get them, but certainly a bit better than the negative numbers that we've had in the first quarter. And I think the other economic data you've seen come through, take the non-farm payrolls last week or the JOLTS numbers, they're really only capturing the first couple of weeks of April when we only had that initial announcement from the US government. And so you haven't really seen the data really capture that weakness that may start to transpire. So we do expect the growth outlook to get a lot softer in the coming quarters in the US. And the market is kind of looking through that. They're saying, well, we've passed the peak in this tariff narrative. We're hearing more around potential trade deals. We're seeing some small adjustments to these tariffs that have been announced and the effective tariffs coming down. And so perhaps they're looking through this and seeing some light at the end of the tunnel. For us, there's still a long way to go in terms of those trade negotiations, where that tariff may end up, and the prospects for further tariffs to be announced at the sectorial level, as we've heard. So we're still a little bit cautious on that, given we have seen a big bounce in the market and the valuations have gone back up across equities, given that we're going to see a lot more weakness in the economy still to come. And I think that's still to be reflected in a lot of the earnings growth from US corporates.
When you look at global diversification, where are you seeing opportunities at the moment?
I think it is a case of thinking around the dynamics of growth internationally. Obviously, the US has been a front and centre for many investors given the performance of the last couple of years. I think we still view US as having some really good, high-quality companies, and so we wouldn't shy away from it completely, taking a more of a neutral view. But if we look towards Europe a little bit more, if we look towards Japan, yes, they are countries that are going to be impacted by tariffs to a degree, but we can see quite a strong consumer story coming through there in Japan. We can see a bit more of reflation in that economy, and we're also looking towards Europe, where we're seeing the prospects of more fiscal support coming through. We're seeing ECB cutting rates, financial conditions loosening, which should boost growth or at least offset that drag from trade growth coming through. And thinking about valuations that have moved up in Europe, but still relative basis looking fairly attractive both to their own history and a little bit more towards the US.
For Australia, it's often been talked about, particularly in light of the trade war, as being sort of a haven market. Does that become more appealing now that we've had that resounding re-election result?
Yeah, you've had 2 months of outperformance of US equities over Australian equities. A third month of outperformance is relatively rare, but I think when we look at the Australian market more broadly, we still take a relatively defensive stance, given that those second order effects of a particularly significant down growth or downshift in growth around the world could still transpire. But again, it's a market where you have high income, which is attractive in these kind of times, where you do have policy continuity now that we've got the outcome of the election, and perhaps more so given the strength of that outcome outcome. And you've also seen, a consumer base that's still rising given some of the impacts of falling inflation, easing policy rates and rising real household incomes all being quite supportive for the outlook here. So the Australian market has done very well. I think valuations are worth watching, particularly amongst some of those more defensive sectors. And again, I think if we were looking at the Australian market, we'd expect it to be one that's probably doing a little bit better than we had expected at the start of the year. But again, the earnings growth numbers aren't especially strong here, and those valuations have started to rise back up a little bit.
Kerry, always great to chat with you. Kerry Craig, Global Market Strategist at JPMorgan Asset Management. One of the stocks we're watching today is in the gold space here in Australia. Gold Fields, of course, that agreement to buy Gold Road and a deal valued at $3.40 Aussie per share. We're seeing a big jump up, although off the session highs, we saw a gain of over 12% a little bit earlier, but off just about 10% there now when it comes to Gold Road trading at the moment. It had been earlier suspended. That deal valuing it at 3.7 billion Aussie dollars, a 12% higher offer than previously proposed. And that will basically seek to consolidate Goldfields' 50% ownership of the Gruyere mine in WA, which is about 11% of their free cash flow last year. So really part of a broader based renewed interest in gold M&A, of course, really being driven by this record-breaking bullion rally that we've had. Also watching Westpac there as well. This is a picture, a little bit disappointing, 3.6% lower at the moment. Profit meeting expectations. Net income fell just 1% in the 6 months to March 31st. We saw a 5% increase in loans as well, some growth in housing loans, business loans, institutional lending as well. The CEO saying that there was also a market improvement in credit quality to interest rate cuts as well. Some optimism when it comes to this election result that we had over the weekend, Shery.
Yeah, we're seeing a broad downside in today's session, despite the fact that we were potentially watching for some relief rally, given, as you mentioned, the election results and policy continuity. But energy is one sector in the Australian market that's leading those losses. And you can see right there, oil tumbling at the moment. OPEC Plus agreeing to increase output further in June. Bloomberg's Nicholas Law joins us now for more on this. So given, Nicholas, that we have seen the immense pressure coming from economic uncertainty from the trade headlines, increasing output seems a bit of an interesting move coming from OPEC Plus. What are we expecting in terms of price forecasts, given that we're going to get more supply?
Good morning. I think you're totally right. We're expecting prices to keep heading downwards. OPEC is dealing with some internal matters. As you've probably already read, prices are falling. The reason why this is so important to OPEC is because right now it's trying to punish its cheats within the cartel who have been overproducing above their quota. And this second 411,000 barrels per day increase in oil production for June, that follows another massive output surge for May. And all this means is that OPEC, in particular Saudi Arabia, is willing to push prices down in order to punish those of its members who haven't been observing their quota. So as they've said, with supply increasing, we're expecting prices to continue trending downward.
So that's the expectation. Of course, a lot of uncertainty coming from the demand side too, depending on what happens with this trade war.
You're totally right there as well. I will say that the demand picture has already been somewhat sluggish even before the trade war became a certainty with the Trump administration. What we're seeing now is that as it is, things are not looking like there's going to be a resolution to the trade war anytime soon as well. Donald Trump, I think late last night, has said something about considering easing tariffs on China because right now the world's two largest economies are basically not trading with each other. But at the same time, any initiatives are still extremely tentative, and it looks like the countries are still caught locking horns. So as you say, with the demand picture weak and no improvement in sight, and the supply picture continuing to increase, I think it's quite clear we're expecting prices to continue heading slightly downwards, if not more. I'd like to point out that this morning, Goldman Sachs has already cut its oil forecast for Brent to the 60s on the back of expecting further massive output increases from OPEC in coming months.
Bloomberg's Nicholas Wah there. Still ahead, we'll be talking US-China trade. Elizabeth Economy, who's a former senior advisor to the US Commerce Secretary, joins us. Plus, Bauer Group Asia will be along with us to talk through the results of Singapore's election, where the ruling party there also retained its dominance. But first, the market reaction to another big election win. Australia's Prime Minister Anthony Albanese headed back to Canberra with that increased majority. This is Bloomberg.
Today, the Australian people have voted for Australian values. For fairness, aspiration and opportunity for all. For the strength to show courage in adversity and kindness to those in need.
Australian Prime Minister Anthony Albanese there speaking on Saturday night after the landslide election win for his Labor government. Take a look at the reaction, or not much of a reaction so far. We're just about 20 minutes into the start of trading. It is a very holiday-thin session with major markets really across the region closed for holidays, but we're seeing a little bit of a muted downside there when it comes to trading in the ASX 200. Watching some of the energy stocks and potentially some of those sectors that could get a boost from that stronger Labor mandate and policy support sector-wise. The Aussie dollar, though, headed in the right direction, particularly as we get hopes of potentially the dialing down of trade tensions between the US and China, or at least that's sort of part of the narrative that is still in play at the moment. But some of that stability, the consistency that we now get from a very strong election result is at play here. Paul Allen joins us now with more. And ahead of the election, not that long ago, we were talking about, potentially a minority government, potentially a hung parliament. That came apart very quickly, very early on.
It did. The themes you were hitting on there about reassuring, stable, safe, these are the sort of things that really seem to drive voter sentiment, because the reform agenda from the Labor Party, that really wasn't one. It was very timid, modest $5 per week tax cuts, more money for Medicare, plan to do something about the housing debate. We'll see if anything actually happens there. But it was a very small target agenda that was taken to this election. You compare that to what the Liberal Party took, and at this election, as much as anything, was about a staggering rejection of what was on offer there. We had the opposition leader Peter Dutton offering Doge-style cuts to the civil service. He promised and then reversed policy on work from home, and he praised Trump in the early stages of the election, calling him a shrewd, big thinker, and it led to Peter Dutton being tagged as Timu Trump in some sections of the media here. But of course, those April 2 tariffs from the US blindsided everyone. The Albanese government looked safe, reliable, better the devil you know. And we heard Anthony Albanese in his victory speech there talking about Australian values, kindness. He said other things as well, like we don't need to beg, borrow or copy policy from anywhere else. It was a pretty strong rejection from the sorts of things we're seeing happening in other countries.
So what will Albanese's second term look like in terms of policy priorities?
Well, he's got a very nice problem on his hands, because for the first time since World War II, an incumbent's been returned with a bigger majority than they had when they went into this election. So he's got at least 10 seats to play with. That's up from 2. There's likely to be a reshuffle of the front bench to accommodate the enlarged factions within the Labor Party. So that's the sort of, in terms of the promises, we're going to have to see, particularly in terms of those policies that we saw around Medicare and housing as well. Anthony Albanese didn't take a big reform ticket to this election, so he doesn't really have a mandate for that, but he certainly has the majority to pursue it should he want to. So structural reform, we'll need to wait and see. For the opposition Liberal Party, though, we need to discuss what the future holds for them, because, of course, the leader, Peter Dutton, lost his seat. So the first order of business is going to be finding a new leader. And secondly, the thrashing that they got in this election has seen them all but exiled from urban seats around Australia. Politics, of course, is won from the centre. A lot of the moderates in the Liberal Party have gone. So there's going to be a lot of soul-searching and a rather brutal conversation, one imagines, about how to win back Middle Australia.
Thrashing is absolutely the word for what we saw over the weekend, right? Bloomberg's Paul Allen there with that election result here in Australia. And still ahead on the Asia trade, life after the Oracle of Omaha. We'll look at what's next for Berkshire Hathaway as Warren Buffett announces that he's stepping down. More on that in just a moment. This is Bloomberg. And of course, the big news, other than the dual elections in Australia and Singapore over the weekend, is a changing of the guard when it comes to Berkshire Hathaway. To be fair, Shery, we know that this was sort of well televised. The succession plan has been really well flagged as well. But still, this is a huge changing of the guard for Berkshire Hathaway, for myriad investors, households that really follow Warren Buffett with sort of this feverish enthusiasm. But he really does leave the business, the portfolio, in a pretty solid situation there, both a giant cash pile, but also a lot of questions in terms of where that strategy goes next, right? Greg Abel, who's the energy executive, long seen as the kind of crown prince and the successor, apparently wasn't even aware that his time had already come. But this is a $1.2 trillion behemoth. Stocks including the likes of Apple, of course, Amex, insurance, energy, railway, consumer businesses, $10 billion a quarter in operating profit. But still a lot of questions as to how Abel will kind of drive strategy going forward.
Given that he doesn't necessarily have any stock picking track record, right? I mean, he joined Berkshire Hathaway in the 1990s through an acquisition. And of course, you mentioned the immense cash pile that Berkshire Hathaway still has. We're talking about $350 billion. How that will be used is a key question that investors will be watching. Berkshire Hathaway has really managed an annualized 20% a year growth over the past 6 decades. Compare that to about a 10% for the S&P 500. One of those winning themes for Warren Buffett has been these Japanese names, right? Like the 5 Japanese trading houses. We're talking about Itochu, Marubeni, Mitsubishi. Those companies that total about $24 billion at the end of 2024 when it comes to Berkshire's investments. Abel did mention that he envisioned Berkshire owning the trading houses for 50 years or forever, that they're building relationships. So we'll continue to watch how Berkshire Hathaway evolves from here. We know that the company has a very idiosyncratic and lean C-suite, but nearly 400,000 employees. The end of a true legacy right there. We have more ahead on the Asia trade. This is Bloomberg. We're watching emerging markets after we saw that run-up in assets last week. Currencies closing at an all-time high. We have the Taiwanese dollar, Korean won, Malaysian ringgit leading those gains. Optimism about a potential China-U.S. trade deal. In fact, JPMorgan saying that EM bonds and stocks have drawn about more than $1 billion in assets in the week through Wednesday. Take a look at emerging market bonds because we have seen investors adjust more of their portfolios. We're talking about taking on more risk, appetite for higher yielding opportunities. This coming at a time when spreads in countries like Egypt, Ivory Coast, Senegal have been on the rise since President Trump's tariff announcements. And we're now seeing some of these bonds becoming perhaps cheap enough and showing some pockets of value in emerging markets to attract all of these investors, Haidi.
And we do continue to see kind of the to and fro when it comes to US and China, which, of course, Shery, has massive implications as China still kind of exists as an anchor within that EM basket. President Trump saying that he's willing to lower tariffs on China at some point because the levies now are so high that the two countries have essentially stopped doing business with each other. However, he says there are no plans to speak with Chinese President Xi Jinping this week. Let's bring in Elizabeth Economy, Senior Fellow at the Hoover Institution at Stanford University. She previously served as a senior advisor for China to the US Commerce Secretary. It's been really interesting, Elizabeth, seeing the signalling from both sides, and we've certainly heard a lot more rhetoric from the US side than Beijing. The statement we had from Beijing on Friday markets sort of interpreted as an opening of the door to negotiations. The tone still seemed fairly much defiant, really kind of requiring the US to rectify what Beijing sees as erroneous steps, right, before these conversations and any sort of compromise or off-ramp can be achieved. Do you think that's a fair characterization, and how much optimism should we have that this progresses?
I'm actually cautiously optimistic, and maybe I read the Chinese side slightly differently. I think, a couple of weeks ago, President Trump, said that, of course, these tariffs are going to come down. It's unsustainable. And Treasury Secretary Bessent also said it was never intended that these, tariffs would remain as high as they are. So I think that was the first opening. And then, the way I was reading things in China, there seemed to be a little bit of a debate going on over whether or not to take these comments as an opening, as a kind of olive branch, and then reciprocate. And you did see the sort of demotion or the moving out, retirement of a fairly hardline Vice Minister of Commerce, Wang Shouwen, and replaced by a very seasoned trade negotiator. And you saw some articles in the Chinese media talking about getting to the table, recognizing that the United States had blinked first. And so I actually think there was some movement on the Chinese side. And the rhetoric now, I think, recognizes that President Trump is not going to take off all the tariffs, which was, of course, the original Chinese demand out of the Ministry of Commerce. That's clearly not going to happen. And more of the talk seems to be perhaps that China would open with a gambit around fentanyl. And send perhaps a Minister of Public Security or a very senior public security official to Washington to begin discussions on fentanyl, and that maybe would open the door to a broader set of trade negotiations. So I am reasonably optimistic, but you never know what might happen with these two countries that could produce another knot.
And the gamesmanship, which is obviously informed by, the individual domestic political situation, is really fascinating too, right? We had that revival of the term of a protracted war, which of course we last saw, back in the 1930s when China was sort of rallying against Japan. Do you think that the perhaps sort of softening or the, tone in terms of willingness to compromise from Scott Bessent, from President Trump, has brought Beijing closer to the negotiating table?
No, actually, I do think that, and I saw the article, the unsigned article, I think it was in the Beijing Daily, on protracted war, which also referenced, Mao Zedong's 1953 book, article talking about we're going to hunker down, this is, guerrilla warfare, and I think that came before what I began to read as counter moves by others in China who, really want to get back to negotiating. And I think, frankly speaking, both countries, I think the leaders in both countries recognize that the tariffs are now going to begin to really hurt their economies, really hurt consumers. And so, it's going to be reduced exports, it's going to be rising prices, certainly in the United States. I think there's going to be an economic contraction. Both countries posted negative numbers. So I think these things are beginning to hit the leaders, and I think they're probably more eager on both sides to get back to negotiating than either side is willing to acknowledge publicly.
And yet everything is relative in the negotiation, right? Who has more leverage? So when it comes to President Trump and President Xi Jinping, who needs a deal more at the moment?
I think this is an interesting question. I think the Trump administration miscalculated at the outset, believing that because, China exports roughly $300 billion more to the U.S. than the U.S. does to China, that somehow we had greater leverage. There was a sense the Chinese economy has been struggling, which is true, of course. But I think, there are two factors that the Trump administration didn't really take into account. First, that the Chinese people have a greater tolerance for pain, or at least they have a political system that will force them to have a greater tolerance for pain than we do in the United States. And second, that China, that we are more dependent on China for some, in a single source or near single source way, which means basically that there's about 30% of what China exports to the United States. The United States has about a 70% or more dependency on China for those products. And critically, of course, critical minerals and rare earth elements, as well as active pharmaceutical ingredients. And those are things that are necessary for our defense, technology, and pharmaceutical industry. So they're really critical to us. In contrast, China does have some dependencies, but they've also spent a lot of time over the past several years, finding soybeans and energy from other countries. So they've reduced their dependency, I think, on the United States in some significant ways that I think gives them, perhaps the upper hand in some respects.
Elizabeth, we have seen within the Trump administration, Secretary Marco Rubio expanding his portfolio, his influence as well. He's talked about concerns around what he calls China's destabilizing actions in the South China Sea. What's the risk at this point of conflating trade and security issues between the two countries?
I mean, I think in the Trump administration, it's not a risk of conflating. I think they are conflated. And, what we've heard at least in the political chatter here in the United States, is that in some of the discussions with U.S. allies and partners, the administration is actually talking to them about facing issues alongside the tariffs and with a focus on China. Now, some of the partners have said, no, China hasn't come up in these negotiations, so I'm not sure wherein lies the truth. But I think there's already a sense that, to some extent, there's an economic war, and then there's a security, not war, but, a set of really big security concerns that the United States has with regard to China. And in many respects, these two, are both part of a larger strategy that the Trump administration wants to put in place, really to contain China in terms of its ability to expand its reach and influence.
All right, Elizabeth, Economy, really good to have your thoughts, Senior Fellow at the Hoover Institution. And coming up, Singapore's voters choose stability, giving the ruling People's Action Party a landslide victory over the weekend. Bauer Group Asia joins us to decode the election results next. This is Bloomberg. Singapore's Prime Minister Lawrence Wong has secured a strong mandate in his first electoral test, with voters choosing stability amid the turmoil of the Trump trade war. Bloomberg's Avril Hong is in Singapore for us. So, Avril, what's the latest on the election outcome?
Yeah, I think it was a really strong mandate for the ruling People's Action Party, which of course has been governing Singapore for more than 60 years. And indeed, this was a supermajority, landslide victory. You look in terms of the vote share, it was higher than in 2020. Whether you're looking at the number of seats in Parliament, it was 10 for the opposition, so meaning they didn't make inroads. And amid all this is really the sense you get of voters seeking stability and safety, something we've been seeing in other elections elsewhere around the world in the past week. But note as well how the Prime Minister had warned prior to the election that inviting more opposition into Parliament could create instability. And that's something he says Singapore just doesn't need at this point. Of course, Singapore is a very trade-dependent economy. Now, as to the road ahead, we're going to be watching out for the cabinet lineup that's due potentially within the next 2 weeks after a number of long-serving ministers retired. We're going to be watching who among this next generation of leaders is going to be entrusted with the defense and national security portfolios. Aside from that, keeping a close watch on trade negotiations as well. We've been talking about the so-called task force man. That's, of course, the Deputy Prime Minister, Gan Kim Yong, and how he's been leading this task force of Singapore's response to tariffs. And Singapore is looking for exemptions when it comes to chips as well as pharmaceutical products. So there's a lot kind of at stake at this point. Let's bring in Nydia Ngiow, Managing Director at consultancy Bauer Group Asia, for some analysis on the elections over the weekend. So Nydia, first off, what is your sense of whether this is more the external backdrop which supported the PAP, or this is more the measures that the new Prime Minister has taken kind of working its way here?
I think it's a mixture of both. I think you can see that definitely the external factors did have a part to play with, the global uncertainty arising from geopolitical tensions and with the ongoing tariffs. I think that people are definitely very concerned about how that would impact, their jobs, the economy, their livelihood. But you can see also that at the end of the day, elections are usually all local. So until I think, once people start feeling the impact of how these tariffs or how the global uncertainty will impact, the cost of living, I think that's definitely why they chose to go with the safest pair of hands. Now, this strategy of, pushing for or positioning the PAP as, the safest pair of hands didn't necessarily quite work during the 2020 elections for the pandemic. But definitely, as we can see here, I think the global factors definitely did have a bigger part to play this time around. You pointed out how other elections this past week have also gone with, the safer pair of hands, and I think that that's definitely something that we have seen here as well.
Are you expecting domestically this deepening of social aid when it comes to the administration?
I think that that's definitely something that we cannot rule out. I think that we have already seen how, the government has already introduced aid for unemployed workers, announced during last year and going to be implemented this year as well with certain rules and conditions. And I think once we see how that takes off and whether or not that has proven to really do help in terms of closing certain gaps within society, I don't rule out the possibility that we could see more of that in the future as well.
Does Singapore have the support in order to be able to pay for these welfare initiatives? And what does that mean for perhaps the tax landscape, the foreign business landscape, in order to attract more business to the city-state?
I think you can see from the recent budget from 2025 that, Singapore is actually pretty well placed. They haven't incurred similar deficits in past years, and it's been a fairly well balanced budget. Of course, you will also see that with the implementation of BEPS 2.0, while that has gotten companies a little bit worried about what that would mean in terms of the operational environment in the coming years, I think the government has been pretty clear in terms of stating that any funds from that will be rechanneled back to supporting industries and making sure that Singapore continues to be a very safe investment environment for companies to operate in as well. And in terms of funding the social initiatives, I think we can also see that, the GST hikes have definitely also provided some buffer in that respect.
Nydia, given this stronger mandate for Lawrence Wong, what can we expect in terms of specific policies that could change the business landscape, especially when it comes to perhaps foreign worker requirements and just supporting businesses overall?
I think we can see that, with this stronger mandate, there's definitely more room for Prime Minister Lawrence Wong and his team to continue to push ahead with their policy agenda a bit more decisively. I think going forward, I don't think that there will be significant changes to the business environment or the regulatory policy, which is exactly what the voters have push for in terms of delivering that strong mandate to Prime Minister Lawrence Wong and his team. I think that you can see definitely more initiatives that would be very much in line with his Forward Singapore agenda. He has already outlined or implemented some of these initiatives at the start of this year and also with last year's budget as well. And I think that you can also see, greater support when it comes to digital transformation, as well as sustainability and manpower policies that would help towards closing this or tightening the social compact that he has outlined with Forward Singapore.
What about trade negotiations with the Trump administration? What are you watching out for there, and what does Singapore have to offer?
I think that it's a difficult question, and I don't know that anyone really necessarily knows what the Trump administration is looking for. I definitely see that, Deputy Prime Minister Gan Kim Yong has already engaged in initial conversations with both USTR Jameson Greer as well as with Commerce Secretary Howard Lutnick. I think that, when we look at the region, definitely Singapore with the having been imposed a baseline tariff of 10% isn't necessarily going to be front in line or prioritized in that sense in terms of wanting to come to a deal with the Trump administration compared to some of the regional neighbors that we have who has seen higher tariffs imposed on them, even though that has currently been paused with the 90-day period. I think that, Singapore will likely take on a wait-and-see approach to see how some of the other countries have been negotiating with the Trump administration, and take some lessons from there as well, just to see what works and what doesn't, so that could, better inform the negotiating position going forward.
Nydia, Ngiow, really good to have you with us, Managing Director at Bauer Group Asia, alongside Bloomberg's Avril Hong as well. We have more ahead. This is Bloomberg.
President Trump says the US will impose a 100% tariff on all movies produced outside of America. In a post on Truth Social, Trump told his followers the process will begin immediately. Let's bring in Chris Palmieri, who heads our media and entertainment coverage. And Chris, so many of Hollywood's films, blockbusters, are filmed outside of the US, right? Including here in Sydney, including right here in the very building that Bloomberg's Australia headquarters is in. So how does this potentially work?
Well, it's just at this point a post on social media without a lot of details. Unfortunately, one of the big questions is, what exactly are they including? Are we talking about a movie that's produced by a foreign production company, shot entirely overseas, that's then coming to the U.S.? If it's a U.S. company like Disney or Warner Brothers that made a movie and, some of it was shot overseas, that's the case. Almost every big blockbuster has some element of a foreign location in it. If you think about, upcoming movies, Mission Impossible, Jurassic World, these are released by U.S. studios but filmed often overseas. So a lot of questions.
Mm-hmm. Chris, how's the U.S. film industry doing at a time when, of course, we know that China also wants to reduce the number of Hollywood films coming into their country?
The industry is not in a great place job-wise. This has been a problem, and it's one of the things Trump is trying to address. He appointed some Hollywood actors in January to be special ambassadors to increase jobs. And the reasons are multiple. The biggest one is that the big entertainment companies lost a lot of money as they made this migration from traditional TV to streaming services. And so in recent years, they've cut back a lot on their spending. Now, at the same time, foreign countries have also gotten more aggressive in the tax incentives. They look to lower productions. The streaming services are trying to be global in nature, so they're trying to produce more local content for local audiences. And so all of those factors have converged to make the job market very difficult, particularly here in Los Angeles, where you see data down, say, more than 20% in the first quarter in terms of productions being shot here.
There have been some locations and states in the US where there's been significant tax incentives, right, to boost domestic shooting locations. Georgia, of course, is one of them, not to mention California. Have we seen that gain much traction? I mean, is the president likely to have more success bringing that production back to the US than he is for, manufacturing of textiles, for example?
We had reported that is, actor John Voight was one of those special ambassadors, and he was going to put something out very shortly, more along those lines. California's, for example, is more than doubling the tax credits it offers to movie and TV shows of all kinds. But we weren't quite expecting the tariff thing and like this. And so, to some degree, China had, as you noted, said they were going to try to cut back a bit on U.S. films. Now, this is part of something that's been going on, again, for a few years there, which is their domestic films are doing so well. So they haven't needed the Hollywood movies as much.
Where's Chris Palmieri there with the latest on Trump action when it comes to the U.S. film industry. And here are some of the other stories that we're watching on the corporate front. Shein is said to be slowing its London IPO plans to a crawl as it assesses the impact of U.S. tariffs on its business and awaits regulatory approvals. Sources say the retailer has halted work on its offering but could still proceed at some point. While Shein targeted a valuation up to $90 billion in 2023, that number has since fallen to about $30 billion. Bloomberg has learned that Shell is working with advisors to evaluate a potential acquisition of its rival BP. Sources say any final decision will likely depend on whether BP stock continues to slide after already losing nearly a third of its value in the last 12 months. Deliberations are still in the early stages, and Shell may opt to focus on share buybacks and bolt-on acquisitions rather than a mega merger.
Shery, we're seeing this kind of watershed moment for a number of Asian currencies, right? The Hong Kong dollar on watch, the Taiwanese dollar on watch as well. We had that big run-up thanks to the backdrop of the weaker US dollar. Hong Kong on watch as we've seen an intervention, buying a record amount of US dollars to defend that dollar peg after the city's currency rose to the upper end of its trading band. So that was a $6 billion spend on the US currency from the HKMA. That's the highest ever purchase of the dollar in one day.
And oil prices continuing to fall below that $60 a barrel level after OPEC Plus agreed to increase oil output by over 400,000 barrels a day. That's it from the Asia Trade. The China Show is next. This is Bloomberg.